are joined from Dubai by Arun Leslie John, Chief Market Analyst, Financial. Arun, thank you so much. In your view, can copper continue going up in prices?
Copper rally this year is driven by fundamental factors. Uh, Obviously, as all of us know, China reopening is a big has given a big push to the copper demand. Uh, China's GDP growth this year is expected to be about 5 to 5.5 percentage when compared to 3 percentage last year. In 2024 also it is expected to grow by in the same range 5 to 5.5 percentage. So among the fixed growth component, fixed asset investment inside China, that also is expected to grow by about 5 to 6 percentage. So since China accounts for about half the global copper consumption, these numbers are very strong. So even if other parts of the world are actually going to slow down, there is a decent probability that copper prices can rally in the near term. Coupled with that, we are seeing some production constraints emerging from the major Latin American producers of uh, Peru, Chile. So, due to multiple factors like whether it's labor, whether it is the technical issues, or the weather related logistics difficulties, they are not able to raise their production as much as expected. Plus, new investments into mine expansion also is not happening um, uh, at a good pace. They are happening below the long-term averages, so that also is not helping the case scenario. New supply is not expected to come much online in 2023, whereas the demand is expected to rise. So there is a good probability that copper rally can continue.
Why do we focus on copper? Why are people focusing on copper price and its implications on the economies?
Copper is known as the doctor, literally, of the economy. So, copper is a major metal that is used in a wide variety of applications, whether it is infrastructure, whether it is electrical related. So, it is very closely linked to the industrial activity as well as the overall health of the economy. So, copper demand and copper prices are always watched by economists as well as major policymakers and even the market participants also. So this year, anyway, I'm not exactly sure whether copper will be act as a gauge for the global economy, primarily because the two parts of the world are moving in different speeds. We are most likely China will be seeing a rise in economic growth this year, whereas the economic growth in Europe and United States might be declining. So there are multiple mixed factors which prevent copper from being a true reflector of global economy this year. But in general, copper is considered to be a very good gauge of economic activity. So that's why economists and all the major participants tend to focus on copper price a lot.
You mentioned that this year it might not be the gauge. If copper is not the gauge in 23 being looked at by economists to determine the how the economy move, what is the gauge they will use? Is there another metal or commodity? Is it oil? Is it food commodities? What will we be focusing on in 2023 as a gauge, given the geopolitical tensions that are impacting these things too?
So that is actually a major issue happening right now due to the geopolitical issues. Even crude oil cannot be considered as a perfect gauge for the global economy. Now, crude oil will be more impacted by what is happening on the Russia, China, Ukraine scenario. So, crude oil cannot be the perfect gauge. Uh, Copper, obviously, it's more impacted by China's reopening. So, not exactly the perfect indicator. So I mean commodities, major commodities, industrial, they are influenced by multiple factors. Iron ore obviously will be impacted more by what is happening inside China. Palladium, platinum have their own demand dynamics, like whether it is for the gasoline demand or whether it is a gasoline to electric car switching. Those factors play a role in those commodities. So it's tough to find out a commodity that can act as a perfect gauge. My view is that as of now, a better economic gauge for the globe might be an equity index. Like for example, SPX 500 might be a decent index. Or maybe we can consider a basket of major commodities, which might give a more unified picture. A commodity
Okay,
index.
sorry to interrupt you. Let me ask you about equity markets. When you say they are a gauge for economies, not commodity markets, there are some analysis which say that equities are usually ahead 6 months. Do you agree? And in this case, where do you see gold? Do you think gold will remain as a safe haven and or will it have its own special path not related to general economy?
So gold, the conditions are favorable for gold. The macroeconomic environment is favorable for gold at this point of time. The yields are declining. I mean, from 4.4, 4.5 percentage, the US 10-year yields have come down to about 3.4 percentage right now. Dollar has weakened. So the major macroeconomic factors, they are bullish for gold. Plus, obviously, we have the China reopening also. China is a major consumer for gold. So that will, India also is a major consumer for gold. So the emerging markets, China, India, which are major consumers of gold, they are expected to outperform in terms of economic growth. So the macro fundamentals of gold at this point of time are strong. But nevertheless, I would like to remind our viewers that gold is trading near its all-time highs. So there might be a correction, but overall, the fundamentals look good.
Arun Leslie John, thank you so much for having us from Century Financial. Have a
Welcome,
nice day.
sure.
Thank you so much, sir.